Mark Selby, how are you doing, sir?
Excellent.
Glad to hear it.
Excellent.
Glad to hear it. You're here for our weekly
Back in
catch-up.
lockdown.
Are you really?
Yeah, in Toronto. So, yeah. So.
Oh, man, that sucks. We've got a week to go on ours. We've got one more week, and then we're being let loose across London. That's happening. Excited.
Good luck. Yep.
Thank you.
Good luck.
Thank you for that. It swings around. I think we're going to be let out for Christmas. Cases will go through the roof again, and then we've been locked down from January onwards. That's the pattern we're seeing here.
But the reason I mentioned COVID is the sequence because vaccines are on their way. So that's, the third vaccine. We've had basically base metal prices on a rope. Copper, zinc have all moved higher. Nickel has not, nickel's moved up, sort of less than 1% from when we talked last week. But the triangle that I've talked about all the time has actually been holding it back. So nickel only moved up 1% versus 3 to 4% for the other base metals. And what it is, again, the thing that I pointed to people is Chinese stainless steel prices as a good indicator of where the market's headed. So we saw about a 7% drop in the past week. And again, the Chinese are also, the entire supply chains are traders at heart. So whenever you see a sharp price move up or down, it causes a whole sort of trading mentality. So what happens is then you see demand contract even more because they think maybe I'll wait till next week to buy just in case prices drop even further. So that's really sort of, shook up the stainless steel market a little bit. And again, we've been pointing to it for the last week that there's been, that has been really flattening out, leveling out. And we've been seeing sort of the first signs that stainless price is going to come off.
It's quite interesting. We were talking to a vanadium producer this morning, and of course, heavily influenced by what's going on in the stainless steel sector. They saw a little bump in the price for a few weeks, and then they're back down to the current level. So these conversations each week that we have on what's happening in China, I know we're also talking about Philippines, Indonesia, but when we're talking about China, the impact on lots of commodities, it's important to understand for sure.
Yeah, I know. And the interesting thing is on the other side of the triangle, you've got the ore inventory. So the other number, told people to watch is that drop in ore inventories, and that's now really kicking in. So we had a 400,000 ton drop 2 weeks ago, 240,000 tons last week. So we've seen inventories already go down 7% in just 2 weeks. So what's going to happen there with stainless prices coming down and ore prices remaining relatively high is, NPI production and stainless steel production is going to contract. So, I think part of it is, we saw, the momentum in the growth in demand, really start to level out a little bit. And you're now seeing more nickel, again, the other leg of the triangle is more nickel pig iron and stainless steel coming from Indonesia. So, I think that's what's, really starting to cap out that the stainless steel prices in China. So we'll see what happens. It'll be interesting to see in another 2 or 3 weeks here what November imports of NPI and stainless steel look like from Indonesia. And I think we'll see some pretty chunky numbers based on where the market is. Now, in terms of the non-stainless part of the market, that's been going pretty well. Again, the thing to watch there are premiums in that space. Because if there's any general oversupply, premiums, will come down quickly. But we're seeing premiums hold up pretty nicely, and we're seeing inventories of pure nickel as opposed to nickel pig iron, contract in China. So last week we talked extensively about EV demand really ramping up in China for sulfate and sort of that whole series of products, and so not the non-stainless sectors, still has pretty good demand coming through.
Are you starting to see people understand the battery thematic more and more? Because I'll tell you why I ask. We interviewed a company called Queensroad Capital beginning this week. Okay, a guy heading that up used to run CEF, which was Li Ka-shing's fund out of Hong Kong, and I said to him, "What do you think of this battery thematic going on? Obviously, things like nickel, copper, lithium, etc." And he's like, "Well, just want to check you on something there. Like last time I looked, nickel was a stainless steel commodity. It's got nothing to do with batteries." And you're like, okay, interesting point of view. I mean, he's got access to a lot of cash. He's been around the block. Yeah. So there are some people out there not quite believers of the battery thematic. What do you make of that?
Yeah, no, there's two dimensions of it. So one is in terms of the overall impact that EVs are going to have and sort of how believable that story is. And then the second one is, in terms of nickel's use in batteries, again, I'm just gobsmacked about, how much people know about lithium and cobalt and are really focused on those two commodities, when again, the largest, metal by mass in those batteries, is nickel. I mean, there was Elon Musk's famous rant about it should be called a nickel graphite battery as opposed to a lithium ion battery. So again, it's an education process in terms of, the fact that you don't have a major nickel producer, whose business is primarily nickel, really talking up the EV market, like you had in cobalt with Cobalt 27, and some of the other players in the cobalt space there. And then obviously with lithium, you have half a dozen large lithium players who've been, talking up lithium for, a number of years as an EV source. But coming back to my first point in terms of sort of the overall EV thematic, one thing that's interesting, I would say, in my meetings, there's a higher proportion of people who sort of buy into the broader EV story. But the one thing, and I don't know if I've made this point in our discussions before, is, again, I've talked about the nickel super cycles before. And so when you go, when we've had them is the late 60s, the late 80s, the mid 2000s. And again, we believe we're going to see another one here in the mid 2000s. Every one of those super cycles was, the industry and investors underestimating the sustainability of, or how big a new source of demand was going to be. So, in the 60s, it was about Japan. And again, Japan had been growing on a rope, and Inco really didn't spend much money, building new capacity in the mid to late 60s. Then kind of realized, oh, geez, Japan's big, and kind of built the capacity a little too late to actually meet that demand, because Japan did level out at some point. In the late 80s, again, we'd come off a horrible, you and I think are old enough to remember, what the early 80s was like. But
I don't remember it. My dad told me about it.
Okay, sure. Yeah, I'll believe that. So that was a horrible industrial recession. And so most of the West had spent, the late 70s and 80s drinking. And then all of a sudden, when, we realized, oh, the economy is growing again, and the interest rates were slashed from 20% down to 5%, people forgot that, okay, we need to actually invest in new capacity and grow things again. And nickel got caught up in this big squeeze. And again, I think the most analogous situation here is with China in the early 2000s. Again, everybody looking back now knew, China was a home run. That was, you could see it coming from, 1,000 miles away. The reality is I was at Inco in 2001, 2, 3, and we were way ahead of the curve on China, way ahead of the curve on nickel. And you can dig out, on the internet, some of our nickel presentations from that time period. And there was huge skepticism that China was just a bubble. They were just building roads and highways to nowhere. It wasn't going to be sustained. It was going to all come crashing down because of debt bubbles in the province, or debt bubbles at the federal level, or debt bubbles at the city level. And 15 years on, China is now 2/3 of global demand for most, between 50% and 2/3 of global demand for most things. And that's exactly what it feels like in the EV side. You talk to players in the EV space. And again, I've said this before, they need to start being more public in their forecasts. They see huge amounts of more nickel coming. Again, if you take Tesla's target 3 terawatts of batteries and you try and slice it anyway in terms of, how much nickel they're going to need, that's 1 million tons of nickel just for Tesla in a 2.5 million ton market. So, it kind of feels like that. And so, again, we just need to start educating more people and getting the word out in terms of, what's really coming down the pipe here. Cause I think, again, the people who got into China in 2002 made a lot of money. People who got in 2005 made a bit, but they left a huge amount of money on the table.
So you have been in tens and tens of one-on-one meetings over the past, every other week you seem to be at one of these one-on-one sessions. You're speaking to 30, 40 people on each session that you do. Are you seeing the same kinds of misunderstanding or lack of knowledge based on some of the questions you're being asked there? And if so, what are the most common misunderstandings about the opportunity in the nickel space at the moment?
Yeah, well, I think, again, in terms of, the shift over the last, 3 years from 2017 till now has been profound. We've gone from, I would say, 0% of investors interested in nickel, to most interested in nickel today. They see some upside. And again, I would say of the meetings now where, again, maybe a year and a half ago, 2 years ago, there would be a quarter of the investors who kind of believe in it believes in a very big boom from the EV sector. I think that proportion is creeping up to around 50% or so. But again, one of the things I bang on from a soapbox is you just have to look at the analyst community. I mean, again, most of the demand forecasts, they have 1 million ton increase in total nickel demand, period, for Tesla, for the rest of the EV sector, for this, stainless steel growth that's, going to continue at 4 to 5% a year, plus all the other uses. Because remember, nickel, there's a lot of nickel used in the aerospace sector, which has collapsed in the past year and is going to stay down for a year or two, but that will come back at some point. And, we'll be soaking up, there'll be a whole restocking that kicks in, when aerospace, production ramps up again. So, I would say, the vast bulk, 75%, don't really understand just how big it could be.
Right. So it's about the scale of the opportunity and the timing. And obviously you're selling your wares in those particular conversations, but are they coming to you with any kind of preconceived ideas about what they think the potential is?
No, I'd say, again, the big thing that's changed is, I obviously have the nickel commodity section in my in my presentation, and literally before, back in past life, 2016, 17, I would have to spend most of my time in the nickel section just to convince people that, nickel wasn't going to be horrible forever, and that, my past life project would be needed at some point in time. Today, everyone's like, yeah, we like nickel. I think everyone likes nickel and sees it as pretty good. I don't think many people sort of, I would say probably anywhere from, again, sort of a quarter to half, sort of see it as a sort of as a potential big bang, where most people think, okay, it'll be better than the other commodities, at this point in time, or as good as copper, which for most investors is, as high praise as you get for a metal.
Yeah. Okay. So, and are they talking about to you in the context of the other battery metals too? They're saying, "Oh, I'm now interested in nickel. It's copper. It's lithium. It's graphite. It's manganese." Is that they're looking towards batteries as the future? They're positioning it as such? Because all these commodities have other uses too. They've been around for a while and they're going to be around. But are they packaging them together in terms of their investment criteria?
No, I think they see the broader EV thematic as an investment theme they want to do. Again, part of the question that comes up, I would say in about 10% of meetings is, okay, again, I hear the battery stuff, but explain to me why this isn't, this isn't just going to be another lithium or cobalt where, prices went way up like a rocket ship, and like every time prices go up like a rocket ship, they come crashing down like a rocket ship. So, just trying to explain the differences in the underlying supply dynamics is key there. So yes to EVs generally, but again, there's some given what's happened with some of the other metals, that there's still some skepticism that there's actually any sort of real sustainable money to be made there.
That's interesting to me. And the only reason I ask is because we get sent in questions by every week, hundreds, if not thousands of people sending in questions that they would like us to ask companies. And you can look through those questions and sort of rank them by understanding. This is a beginner, clearly. This is someone who knows a little bit, but is maybe just starting out, or maybe that's as far as they want to go in terms of their understanding. There's some people who really kind of get into the weeds with the detail, and it's worth remembering that you've got all sorts of investors, and all of their money is good. A beginner's money is as good as an expert's. So you need to get them all over the line, or get them over the line which they have drawn as far as they need to go to get them to invest in you. So I just wondered what you were sort of seeing and hearing, and was it consistent in all of these sessions that you do? Because it's probably, how many do you reckon you've done this year in terms of the online sessions?
In terms of individual investor meetings?
Yeah.
several hundred at least.
Yeah. It's crazy. It's crazy, right? Right. I want to go on to something. You did something last week for us, right? And you talked about a few companies, and we kind of got into a little bit of detail about some of these companies, and we had amazing feedback from that. People were like, okay.
Oh, good.
I like that because there's some lessons to be learned there. So we're going to go with a couple of names that we talked about last week and maybe a couple of new ones, if that's okay with you.
Sure.
Okay.
Yep.
We're going to test your knowledge, Mark. We're going to test your knowledge.
Okay.
So we talked about Estrella, which is a good one. So talk to us about that. What are they up to?
Sure. So that was, again, we sort of set it up as doing a step out and the importance, again, any high grade intersection is a rare commodity in nickel. So if you see one, jump on it. Two, the next thing is trying to understand sort of what that high grade continuity looks like. And sort of, again, you're going to get some view in terms of the confidence of the management team of how big it could be and how confident that it could get bigger is by the size of the step outs. If they're doing kind of 5 or 10 meter step outs, then they're a little bit nervous. If they're doing kind of 25 meter step outs, then that's that for a high grade deposit, that's kind of an appropriate step out. And so they hit 20 meters of sulfides. They haven't got the assays back, again, of varying grades, but that's good. That starts to show some continuity, and they've got a geophysical target, that's there. That's great. The other one that last week I haven't talked about, and remiss from me from not seeing it earlier is Azure up in the Pilbara on the north coast of West Australia. Mark Creasy, who's again, he's one of these guys, if you look at a bunch of the big discoveries in Australia, he's been in the background doing some of the initial prospecting or owned the land at one point. And he was with Nova Bollinger, he was involved with that. And so he made some discoveries up in 2018, some actual Gaussons, which are like, oxidized nickel sulfides at surface, which you don't find in many places these days. And so, he hit some, again, high grade, not over big thicknesses, but, again, hit some high grade there. So Azure picked this up earlier in the year, and they've had a couple nice holes. Their last hole just came out yesterday, and again, 21 meters, about 30 meters away from the prior hit. And again, they've got a nice, looks like 200 meter by 1,000 meter geophysical target that they're drilling that starts about 300 meters down. So, again, that looks pretty soon. The stock is, completely ripped. Again, sometimes I wonder whether I should be listed in Australia rather than Toronto, but we'll see what happens on that front. Again, the other high grade, group that continues to make some hits is, Talon hit 8 meters of higher grade sulfide around at a depth of 400 meters. Again, a decent way along strike from the prior hit. So, again, the key is it's good to get a multi% nickel hit. It's the ability, to extend it. And just to give people a reference, like in terms of, okay, well, how big do you need to kind of get to is, kind of at the densities of what, high grade nickel looks like is, you need something in the range of, 10 meters by 5, 10 meters by 50 meters, between, 500 and 700 meters long. So, again, as you're, thinking about people drilling, and getting to 1 million tons of resource, are they defining that a box that looks, at least that big? So,
I mean, that's quite interesting, actually. It's nice to sort of see these high grade numbers coming out. And obviously, you've said on multiple occasions, we need all of the above. We need lots and lots of nickel. Yeah. Mr. Musk said the same thing. But just help me a bit here, because I'm trying to understand what should we be looking for further down the line when we're trying to understand sort of the scale of these operations, certainly around the economics.
Yeah, for sure. Because we've talked in the past around laterite operations in terms of what the scale, and the operating costs, look like there. And again, I really encourage investors, if you think something you want to hold it through as into a development story, is really look for some good benchmarks in terms of, what the costs of those projects would be. So just sort of, as some real world examples, to look at. So in terms of a small mine only operation, you're looking at Mincor's is building Cassini right now. That's 1 million tons at 3%. And they're in quite lucky that they're in the neighborhood of the BHP Cambalda mill and can use that and don't have to build their own mill and tailings facility. But again, to get that mine going with all the startup capital and everything like that, you're looking at close to $100 million Aussie, to be able to get 1,000 ton a day, underground mine going. So that's one benchmark. The other good benchmark, would be the Eagle mine in the U.S. Again, they had some pretty stringent permitting requirements, to be able to, because in that part of the U.S. there's some, so they're not keen on sulfide mining in some locales. And so, they spent to do a mine mill complex that was roughly 3,000 tons a day. That was $800 million US. About 5 years ago. Rio Tinto got it started. Lundin bought it when it was half built, and then spent the remaining $400 million, to get going. And then operating costs there, they're looking in the neighborhood of $120 a ton. I can't think off the top of my head what Mincor's operating costs, mining costs are per ton, but it's those kinds of metrics that you should seek out. That's why, again, in terms of what we're looking at Crawford, we've got the Dumont benchmark there, for 50,000 ton a day operation, that's roughly, $1 billion US to build an open pit mine mill, that kind of scale. And we've got other benchmarks around, between Dumont and us that are large scale gold operations that, can help you zero in on what those capital and operating costs, you could look like. So, again, as people start to get the exploration, get the resource going, and then start to move to the development stage, just try and find some benchmarks to stack these things up against, and that'll serve you very, very good. And again, remember, you have to make a lot of discoveries, to get one that ends up being a mine. So
fantastic. These are nice. Each week you give us little clues. I think we should probably cobble those together for everyone on the club and just put them in one place. Beautiful. One last thing I want to talk to you about today, which is Macquarie. They put out some work recently because last week we talked about carbon taxes and carbon pricing, etc. In mining, and I think Macquarie put out some nice, a little bit of help. So I talked about this prior to the show starting. So what did you make of that?
Yeah, no, they were sort of highlighting the fact that you've seen a pretty good rebound in carbon pricing in the EU up to 30 euros a ton, with a view that that's going to should continue relatively strongly because there's a whole series of other policy measures that are expected to be in place. And then there's I've made reference to this carbon pricing adjustment. So it's basically again a carbon-based adjustment mechanism that'll be applied to input materials that come into the EU. So again, if governments can use something as a trade weapon, they always will. So, the relevance, particularly for nickel and stainless steel, is, we've highlighted the huge carbon footprint, that a lot of these Indonesian operations have. Again, particularly in the European stainless market, we're probably 80% of the feed that's used to make new stainless steel is recycled stainless steel. So it'll obviously have a much lower carbon footprint. So, again, it's still several years, probably the second half of this decade before, that mechanism actually lands in place and being there, but it is coming down the pipe. And again, with those kind of 30 euro, prices, all of a sudden, every ton of CO2, if you've got a 8 or 10 or 50 ton differential versus kind of the home team player, that's going to be a pretty stiff tax or potentially pretty big premium if you're, able to produce a carbon, a nickel or stainless steel product, at a much lower carbon content. So
I'm fascinated as to how they're going to regulate and control this. There's something which they refer to as the carbon border adjustment mechanism, which already sounds like a handful, let alone trying to run it. So that will be interesting to see how, who, how much, and how effective it is.
Yeah. Well, like most regulation, people try and find a way around it. But, to the extent that, again, they seem pretty intent on getting it set up, and the fact that it gives them a trade lever that they can use, to punish people who are not EU producers. Governments are always, particularly the EU, is pretty good at using something they can use as a trade hammer. So
Yep, we talked about that last week. That one's going to run and run. I look forward to that. Well, look, Mark, thanks very much for the update. So quite quiet week, but I think people are enjoying these sort of company run-throughs. They like the insight as to things that they should be looking for when they're doing their own analysis, and I guess we'll try and help them as well by putting all that together in one place. Thank you very much. By the way,
all right, good to see you this week.
By the way, how is life at Canada Nickel? All well?
All going well. Yep. No, we're pushing hard on the PEA, pushing hard on the network, pushing hard on the drilling. Again, the biggest impact for us, fortunately, COVID up in Northern Ontario, where our project is, they've had relatively few cases and business has gone on. But I may have said before that, the huge spike in the gold price and all that gold financing means that there's a lot of drilling going on in the Timmins Gold Camp, which is, impacted the assay labs turnaround times. But other than that, no, things are all moving very, very well.
Beautiful. We're watching you closely. So we'll talk again next week.
Sounds great, sir. Take care.